Hello and welcome to Nirmal Bang, ladies and gentlemen. I'm Hiral Dadia. We have with us Mr. Srinivas Gopalan Rangarajan, Chairman and Managing Director of Data Patterns India, joining in. Welcome to the show, Mr. Rangarajan, and a pleasure to speak to you and have you on the show. And congratulations on achieving this milestone with regards to the IPO. Firstly, before we talk about the IPO, if you could just give us more details for the viewers as to what the company does and, what is the history background of getting into a business like this?
Okay, we are a defense and electronics focused, defense and aerospace focused electronics company. We are very differentiated from the companies in India in the context that we are the only company who design across the spectrum of electronics. All of electronics we design. We design from building blocks to end systems, which nobody else does. We have complete competency in domain, in electronic warfare, in radars, in communications. So we build end equipment. We've been a product company throughout our life, even before we went into defense and aerospace about 20 odd years back. We continue to be a product company. Over the last 20 years, we've worked extensively with DRDO and developed a whole range of products. And some of those products now are kicking into production contracts. So we have about nearly 600 crores orders on hand, which is about a couple of years of revenue. And we have 10 times that in terms of a pipeline. That is products already designed, developed, approved, or under certification, where repeat orders are expected. So we are on an inflection point today, not generally because the product company has contracts on hand and the pipeline is there. It's also because we have an infrastructure to deliver on those programs. We have exceedingly strong management team and engineering team and process-driven organization. We have about 750 people, out of which 450 engineers. 350 plus engineers are in design and engineering. So we have a very strong design competency model. All this is a start, but the important thing is the Indian market has now opened up. Earlier, it was only focused, it was only foreign-driven, international, we were a market for the foreigners. Today, government has changed the policy and say that Indian defense systems we need to do in India. So we will front-end the business today. With the result, enormous market opportunity is opened up. The important thing is to address the market opportunity, we need to have products. So a product company like us, if you're able to deliver the products and scale their capability, address the opportunity which is opening up, then we can scale substantially. So we believe we are an inflection point today.
Absolutely. And I think Make in India is the theme that is expected to continue as well. And Atmanirbhar India is what we're looking at now. So with this, if you could just give us more details with regards to the IPO, how much are we looking to raise, the issue size, what are the objectives, and where are we going to use the funds?
Okay. See, we have a part secondary sale and primary sale also. The primary sale is about 300 crores. And what we want to do is use the proceeds to repay the loans, working capital loans we've taken in company, and also look at the next couple of years of working capital, what we expect loans to happen. So, that is funding that. Second is because of the contracts on hand we have and the expected contracts, we are doubling our infrastructure in terms of production. That has already started. We started about 6 months back. Construction is going on. In another 4 months, we'll finish construction. We're spending about 85 odd crores in that modernization infrastructure. Out of which 60 crores will come from the IPO proceeds. The rest is for general corporate expenses.
Right. And with all of this in terms of where expansion goes as well, let's start off with the revenue side. On the top end side, if you have to divide it between international and domestic markets, how is the revenue breakup looking like right now?
So we do about 10 to 12% of export business. It's not a very large business. It's not a manufacturing business. We again design our products and IP belongs to us and shared IP. We ship it to, last year we shipped to UK, large part of it, and then about $1.5 million we shipped to South Korea. Again, it's a government defense agency. We built a product for them. So this is where it is. I think the export will scale now. For example, whatever we did for the UK company, we do avionics for airborne radar. And they're very happy with the product. We have 3 versions of this done. This month, we're shipping the 100th system. So they're very happy. They're saying another 200 systems we're going to order in the first quarter. About 140, 150 crores we expect in the first quarter. So that will grow. But more importantly, here the market in India is growing largely. So the export is only a percentage, a small 10, 15%. So margin, this is where we are now. But the intent is to start exporting seriously. But not just the product. We're also looking at So we have an enormous competency in technology and product development. We're trying to duplicate ourselves, make a small shop, see whether a division or department to scale this as a service industry, like everybody like HCL and Wipro are doing. So we're also going to look at that and make it a serious initiative in the coming years.
Right. And just to understand, a business that you are in, you mainly deal with the governments across, right? How difficult is it to convince one government versus the other on the product that you're delivering? Does it happen that you have to go to the government with the product that you offer? Or is it that the governments offer or give their specifications to which we start designing for them?
There are both opportunities, but largely it is, see, there are two parts to this government business. One is MOD business, where they buy full equipment, and that has just opened up to us. So the large part of the last 20 years has been in the design business, design and product development of DRDO. So DRDO then builds the full system, subcontracts part of that system. Okay, so their definitions are given by them, and we design for the definitions. So that is a large part of the business which we've been doing. And once that business matures, and they produce, deliver. Once they deliver and they accept it, they transfer technology to the PSU, and the PSU on nomination will get the order. Back to back, they place orders with us. That's the model we worked on. So it's again specification we design largely. When we go to MOD business, they buy equipment. So they again requirement specification equipment is there that is drawn on various their own requirement, but mostly drawn on foreign equipment specification. So we have looking at that kind of equipment, we design the products.
Right.
But rarely we take it up. We also have some products we design ourselves and then go and sell. We are trying to do some of them in Indian context.
Right. And right now, what's the overall capacity that we have, and at what utilizations are we running?
See, on the electronic manufacturing, we have an automated pick and place line. So we're probably using 40 to 50%. But there is peak requirement, so it gets used in the last quarter very highly. And then the rest of the things we have capacity to build whatever we are delivering now. The capacity increase is making us in doubling the capacity we're doing today anyway, based on the orders on hand and expected contracts. More importantly, from electronic manufacturing today, we are trying to scale to system company, as a system company. That means the entire radars to produce, trucks have to be brought inside, integrated with the EW equipment, things like that. So our expansion is now going more focused on we're creating a hangar space where multi-ton metal can be brought inside, a full system integrated, we can integrate full systems and deliver to MOD. So that is the kind of scaling we're doing today.
Right. And overall, I know you can't give numbers because of SEBI, but what's the growth anticipation over the next 5 years? And what are the key milestones we are looking to cross?
See, where we are today, we have about 600 crores orders on hand. So it's a couple of years revenue from what we did last year. And we have a, multiple size that as a potential or a pipeline created. I can give you a few examples of pipeline. There's a radar, Arudra, which is again, inquiries come to BEL. We have done the electronics for that. So back to back, an order will come to us next year. Again, there is an EW which have been delivered to DRDO, and based on which Himshakti order is getting finalized at BEL. That is already negotiated. So we expect another 200 crore revenue from that coming there. And then we have done the radar warning receiver along with DRDO, a very modern wide open radar warning receiver that is now flight tested. We did this, actually that flew in the Balakot strike. Now this is, being flight tested in LCA. If it happens, about 100 systems will come as a couple of 500 crores order. This is also going to flight tested next quarter in Sukhoi 30. About 270 Sukhoi 30. So more than a couple of thousand crores of requirement is there. So and then we have done the radar for a naval application that is going for upgrade for the Dornier platform, which government has cleared 2 weeks back. Like that, we have a huge amount of position created. So if you look at growth from that perspective, I think we'll scale faster than what we do last year on the rate. We should grow in the next 2 years, at least we have full visibility of growth based on the contracts on hand and the pipeline created. And so next short term 3 years, we have full visibility. And medium term, because of those big contracts that kick in, I have some visibility. And thereon, we have to strategize to see how to address a large market which is opened up to us. So I think scale in the same ratio which we're doing is slightly better than what we've done last 2 years.
Right. And my last question coming to you is, in a sector like yours, business like yours, R&D innovation is of utmost importance, right? So how are the spends as compared to revenues? And do we see a scale up on that front as well?
See, what we have done, we've been when we went into DRDO, what was told to us is the first order was very successful, BrahMos. We won this against L&T, Tata, and all of them. And kept giving me another 30-40 crores revenue every 2-3 years or 4 years. But all the other programs in DRDO did not do this. We were told we do a display, cockpit display for LCA. Hundreds will follow every year. But the LCA itself was not qualified. So we went into ups and downs there. Then we decided if we develop it, we can't capitalize the development costs. We didn't do that because we're not very sure when the order will come. So all along, what we've been doing is we've gone across DRDO and developed products to smoothen the ups and downs, but absorbed all the development costs. We write off development costs in the revenue year which we deliver. So that has happened. What we're going ahead, what we're doing is because we still continue to spend about, we look at the order book now, 600 crores. 20% of this is development revenue, and then 70% is production revenue. So we continue to spend on the development revenue, write it off. But scaling to 800 crore, 500 crore, 1,000 crores, we don't have to really go to 20% on that. The percentage may go down, but we'll continue to spend based on the earnings which we're doing.
Correct. Got it. So overall, it seems like a good space that you're in as well, where we are achieving growth. Thank you, Mr. Rangarajan, so much for joining us on the show. Pleasure to speak to you. Congratulations once again. Good luck for the IPO and stay safe.
Thank you. Bye-bye.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.